Good day all. Ira Epstein with your SPDR ETF video for this Tuesday, March 17th, 2020, just getting on to 5:40 p.m. Daylight Savings Time. We're watching events that are historic in their nature. We're watching how the Fed and the Treasury are coming together to throw everything. The bazookas are out and they're throwing everything at the market. There'll be more. When I say everything, they're not done. It's just going to keep coming. And the idea here is, I think that the Fed and the Treasury realize they can't turn the COVID-19 situation. They can cushion it. And what they don't want to do is see the economic market seize up. I was surprised to even hear that there was any talk that they're, from the president, Mr. Mnuchin, I think it was, Steve Mnuchin, our Treasury Secretary, that there was talk of shortening the trading hours. And I'm talking New York Stock Exchange. Why? Most of the trading today is done on the internet. In the background, there are the special option situations, special big deals done, but the day-to-day trade, I'm very much against any move like that. You don't have to. This is no longer pit traded. We're sitting here at the Merck that closed the trading floor the other day. We're in a pretty big grain firm. I'm not hearing anybody that can't get their option strategies off. I'm not saying it can't happen, but I'm saying I'm not hearing that. And I think the same should be said. In fact, the exact argument, you keep everything open. Could the floor have to close there because of the COVID? Absolutely. Maybe they should. That doesn't mean that the background structure, the trading, doesn't go on. Maybe the grammar was wrong. That's my point. So we're watching tonight the Fed saying, come all you takers, bring me anything of quality other than an ETF, which is made up of other parts. Bring me that. We'll haircut it. We're going to give you short-term loans against it. We're going to keep this system open. Don't bet against the Fed. It's that simple. Bet with the Fed. Is the market at bottoms? No, but could we have made, in all the craziness, gotten interest rates way too low, possibly? It's possible. If you saw the backup today in the bonds, how much they fell, 7 full points in a day, I've never seen that. I mean, that's monstrous. But as you look at this, you can see how the markets have come down, and we're in the price in the worst case scenario of the COVID situation. And no, it's not over. I've told you that I'm a believer in what I learned out of the Chinese situation, how we looked at that, and then how we started looking at the European situation. It appears the markets get all the bad news over the weekend. They break down so far on a Monday. Sunday night, Monday, we come in, the market does its thing. Tuesday, you get a small or an attempt at a reversal. We had one today. And then the question is, can you hold on to it at all? Because you got the cycle starting that following weekend. We are at that point. And the news is going to get worse, not better. The Fed will do what it can. The Treasury will do. But nobody can stop this virus yet. And that is the important part. And we're still going up the bell curve. On this side, we haven't gotten to the peak yet. So when you look at the market, it's pretty classic bearish. Lower highs, lower lows. Until it's over, it's not over. A sign will be when the market breaks this pattern, which it hasn't done. The resistance, the 200-day moving average of closes. So if the market could get there, that's one of it. And there's a bearish situation happening when this 18-day average is rushing to get under the 200. Wouldn't surprise me if it means another wave of selling comes in after that. No surprise, but trend down. When you look at Bollinger Bands, I stay with what I teach. The odds of staying, even in crashes like this, 5% of the time under a Bollinger Band? No. The market gets under, it bounces. Now, does that mean it doesn't work lower? No, that's not the concept. The concept is it might be coming out here and the traders are trying to sell the market on the right-hand side until there's reason not to. And they don't have it. They have an oversold condition. They have the trend down, the bias down, but momentum refuses to embed. It is still the point where, unlike in the futures and other markets, you're just not doing that. This market has zero problem getting up and embedding, putting the red and the blue line sideways over 80 for days in a row. That's what I call embedding. This market's refusing to embed to the bear side. It gets enough people that think they can keep it from doing that to give it a bounce, but it's still very much a bear market. Same in SMH. You're trying to embed. You've got both numbers under 20. 1 day, 2 days. This was yesterday. And you had it here. There's your third. That's what it takes to embed. So until the red line closes back under 20, all I'm looking for are bounces away from the Bollinger Band, but I think the pros are going to sell into these bounces, looking for the market. As long as it keeps that reading, they'll stay in place. And by the way, it's not often you get an embedded reading in this. I can turn around here. You won't see it. So that gives you an idea how vicious the move is to the downside. When we get to the material sector, Spider, are we embedded? So both numbers today were under 20. Both were under 20 Monday. Both were not under 20 Friday. You could embed tomorrow. You haven't done it yet. You're just oversold, moving to the right-hand side of a Bollinger Band again in a market that's in a downtrend with downside bias. All these crossovers have produced a vicious decline in the market on moving averages. Energy sector, classic case of embedded, classic case where it just keeps dropping. I don't see the bottom in this market. It just keeps moving lower. They don't even let the shorts, the longs out. Have you noticed you don't get a higher high day here? It's just lower low days. This is what you call, you're caught. You're saying, I can't keep going lower, and it keeps going lower on you. It's a mixture of everything shutting down in America and Europe, less demand for the fuel, the gasoline and everything else, and a price war between the Saudis trying to grab back market share from Russia and the U.S. QQQ, running the lower Bollinger Band. I'm not going to keep repeating every one, the embedded reading. You see it, you're getting your bounces, but be careful. This 18-day average is going to make a challenge of that 200, and that's not a pretty sight. Emerging markets continue down with the embedded reading. You get bounces, that's all they are. You haven't broken the trend. It's still in a free fall market is very much the way to say it. In gold, gold made a stand against the 200-day average yesterday. It finally hit it. That's this line. Bounced today over the upper Bollinger Band, lower Bollinger Band, I'm sorry. The resistance is first that 100-day average with it, which if you'll notice, that number comes in at 144.47. You got through it, but you closed right in that zone. If it can rally further, next resistance up here, an oversold condition though. So not a market that I think is screaming to the bears, come sell me, but it is in a downtrend, but that's my bothersome part. The gold miners, well, they've made a statement, $16 too cheap. That's what they said. And you see it, how you bounce back and you even followed through. There's resistance up at the 18 and the 100-day average, but it's not a trend per se. Let me define trend. Lower highs, lower lows. Don't have it. You could set one in place with a lower close tomorrow that doesn't take out today's highs. That could set one up in place. In TLT, you've got a market that once you lost the embedded reading back here, it started telling you it wants to go back to that 18-day average of closes. And it's so hard because traders will say, it's bouncing on you, whatever it's doing. You still lost that momentum. The odds favor. That's all I can tell you. You go figure out the odds. I know them because I've done years worth of studies with it. The odds are strong. They're better than 50-50, the price, and the closest moving average are going to attempt to get at each other. And that's what it did. And now the market's in a downtrend. But what is it really? It's probably saying that we got too low in the 20-plus year instruments in their yield. The market's pulled back here, but it's instantly oversold. So it used up a lot of energy to get back here, but being oversold, I don't think you're going to attract a lot of short sellers. Currency trades out of control. It's really that simple. To go up like that and straight back down 2/3 of the break, I'll let you do that. It's too difficult. I don't think anybody caught this that I know of. That, by the way, I'm saying that wrong. Catching it might have been the play, but I think you would have been stepping out early in it. That's what I should be saying. And catching all of a sudden the swing back because you had to pick a top and say, no, it's too much. I think that first challenge of the Bollinger Band here is where a lot of traders came out of this market. I think that was excess. And now, what are you going to do? Start selling it here with the stop all the way back up there? It's a lot of risk. I talk about this and a lot more in our research. So if you haven't seen what we put out, you might want to take a look at it. All you need to do is go to our website, www.iraepstein.com, under free offers. Sign up, you're right on the list, and we take it from there. I'm Ira. Hope to see you tomorrow. Remember, it's getting thinner and thinner of people in this building. I'm still here. You have a good night.